Tape up, down, all around. Are we in store for a lot of that yet again in June? Let's ask Josh Brown. He is the CEO and co-founder of Ritholtz Wealth Management, a member of the Halftime Investment Committee. It's good to see you as always. What are your expectations? What are you watching closer than ever right now?
I think like everybody else, I'm keeping an eye on yields, and I'm thinking more and more about the potential for some of the stock market weakness to leak into the real estate market, and then ultimately to see some of that in the form of credit card issues and the corporate debt markets. I really feel like we're in the point of no return. You know, we've had pullbacks for stocks that have lasted anywhere from a week to 6 weeks. Ultimately, over the last few years, almost every one of those pullbacks very quickly resulted in a race back to new highs, or what we began calling V-shaped bottom, V-shaped recovery. That is not what's going on this time. We're getting bounces, and those bounces are being met with a rolling over very quickly afterward. And once you get into that pattern for a longer enough period of time, the sentiment kind of permanently turns. And I think that that's where we are. So this is going way beyond what the Dow and NASDAQ are doing in any given day. We're getting stories about firms like Fidelity writing down very big positions in the private markets, given the new reality that's come to venture-backed startup land. We're seeing articles about Hampton's real estate being affected. We're seeing transactions for new home sales, existing home sales start to fall off a cliff year over year. And I think that when you're thinking about the stock market, you have to think about it in two ways, Judge. Part of the time you have to think about the impact of the stock market on the psychology of the consumer, the business owner, et cetera. But then you also have to think about it as kind of a real-time sentiment indicator. And I know we have sentiment surveys, but just look at stocks. When they can't hold a bid for more than an hour on what normally would be considered good news, it's very problematic to make the case that new highs are in our future anytime soon. So that's where I've been for months now. I wish it weren't the case. I love coming on here with a big smile, but look, man, price is truth.
But you know what?
This is what's going on.
You know what? I hear you. And I'm listening to you, and you sound to me even more negative than you've been. You truly do sound more negative than you have been about the overall environment, because you describe an environment, Josh, that sounds to me like you think is going to get a lot worse, and then there's no way in your mind that the stock market can perform or do anything constructive in the type of environment in which you describe.
I think what you have to do is lengthen your time horizon from when you expect positive returns from the investments you're making now. Like, you have to be willing to buy stocks or invest in an index fund or pick a manager and say to yourself, this doesn't have to make me look smart a week from now. Like, you have to be okay with that, because I think what a lot of people forget is that there's three options here. It's not just markets go up or markets go down. Markets do nothing is another option. We've had entire years with just chop in both directions, and the result is nobody's happy. That is a thing that you have to live with if you're a long-term investor in the short term. And if that's how this year is going to go, I think it's actually the better of you know, some other outcomes. So just real quick here, try to think about it. Just try to think about it this way: we had 10 years of 15% average annual returns for the S&P 500. The long run average is 7%. So for a decade, we had twice as good average annual returns that anybody should ever have expected. A lot of that was the result of persistently low inflation and a Fed that had more latitude to save the market. That's not what we're in right now. So I really feel that mentally you're going to have to prepare yourself for an environment in which the stocks you buy don't reward you the next day. And if you can't do that, maybe consider losing the password to your brokerage account and stop looking. Stop looking. Try to make smart decisions and then live with them for longer than a few days.